Yo, what's up, boys? Your boy Chris in the Cycle, and today this video is for beginners that are trying to learn ICT in 2025 or 2026. I understand that ICT can feel a little bit confusing, and you might know the basics of trading, but don't fully understand the concepts yet. And I'm here to try to make it as simple as possible. Uh, I'm not going to go fully in depth with the concepts, but I am going to show you guys my strategy that I use, that I personally use. Um, and then later on, I will be breaking down the confluences and how to actually properly use them and implement them into your strategy. So this is probably just going to be like a step by step for my strategy. I am going to be showing you guys examples or how I do my setups. So here for things first, we have MNQ. You can use regular minis or micros, whatever you prefer, and then you have ES. And then the reason you use both of these are because they are correlating assets and they help you have a biased. But let's get into it. This is not signals. This is not fast money. This is a structured model built around session timing, liquidity, smart money divergence, fair value gaps, and the 50% retracement. So whenever I enter a position, do, I always trade on New York Open, no matter what. I don't like doing Asia. I don't like doing London. And that is only because there is not enough volume in the market for me to be comfortable and confident enough to enter a position. I am always going to do New York no matter what. So, first things first is I mark my highs and lows from previous sessions. So here you can see that I have previous New York open high marked out, and then New York previous low, as well as Asia high, Asia low, London high, London low, and then we have New York. Well, during this position, this would have been present, so New York high and New York low. London, kind of the same session there, but I would mark this out on the 15-minute time frame, and then I would also mark out any fair value gaps that I have that could possibly be interfered. Um, so here, my overall bias for New York Open was down to sweep the low because on Asia swept the New York high, London swept Asia high. Um, there could be a possibility that we could go higher. Therefore, you always want to make sure you have any resting liquidity above marked out in case, because those would be your area of interest to a reversal. So I would have had that marked out. Um, let's see. So yes, you would wait for manipulation to the upside or the downside. Obviously, we didn't go up. If we would have went up, I would have targeted one of these liquidity points. We went down, right? Open, New York open. Went down. Boom. We swept Asia low. Boom. We swept New York low. That's my first confluence. We swept two previous lows. There you go. We swept previous New York low, right? Actually, sorry, I take that back. ES swept previous low. NQ didn't. You know what that means? That is an SMT. That is a bullish SMT because those two correlating assets are technically matching assets and they move very similar. And a SMT is whenever, for an example, ES sweeps the lower low and NQ fails to sweep the lower low. So that is an SMT. Two confluence already. We have crazy manipulation. We swept multiple previous lows, and then we had an SMT on the higher time frame. Boom. That's my confluence. Then I wait for a reversal. I start seeing, sorry, I meant to go on the 1 minute time frame. Then I go down to the 1 minute time frame. This is during market open, right? After the SMT, I look for reversals. It's not 100% sure. Just because you see an SMT does not mean that you have an entry. Not at all. You need more confirmation than just that. So another confluence that I like to have is a short manipulation to the upside. After that, I prefer the manipulation to have an SMT, I'm not an SMT, a fair value gap on the 1 minute time frame. So then I can have some sort of resistance there. So I prefer to have a 1 minute time frame, fair value gap, but if it's not there, it's okay. You know, a lot of people prefer it to be there. I do, but I'm fine with it not being there. It's okay. Um, I put 50% of the Fibonacci here of this move. We came back down, right? So I still wouldn't have entered this just because we had a higher SMT time frame. Doesn't mean to enter. I placed my Fibonacci. We still haven't respected it. After this, okay, so pretend none of this is here. Boom, we have a 1 minute SMT. 1 minute SMT. That is even more confirmation. Not only have we swept previous lows, liquidity points, we have a higher time SMT. We have a 1 minute SMT, and now we're respecting 50% of the Fibonacci. I know we don't have a 1 minute or lower time frame fair value gap, but I would have entered this. I would have entered this. I would have entered longs here, and I would have set my stop loss around this fair value gap and below this liquidity here. And I would have targeted these highs. So I would have targeted London high, previous New York highs. Let's go back up. So pretend I'm in this trade at the moment, right? I'm in this. I do hold it, and I look at the 5 minute time frame. I would have held this, and obviously a smart person would either trail, take partials, and break even for sure. 100%. Keep as much money as possible as you know. Don't risk everything, and don't leave your stop loss down here. Make sure you go break even. So what I like to do is I go down to the 2 minute or the 1 minute, and then I look at the big manipulation upside. I try to find the very center of this move. So I use the 50% of the Fibonacci of this manipulation move, and then we have a I target one of these fair value gaps, right? It could be this one, or it can be this one, whichever the case may be. So unfortunately, if I would have went break even after, sorry, let me mark this out a little bit better for you guys. So break even, boom, pretend I'm here. We go up, we tap into it. I like to close in the fair value gap. I don't go break even until we close either in it or above it. I so I wouldn't have went break even here yet until we closed in it. So we came back down. Our stop loss is still down here, so we still wouldn't have been out. We came back up. We finally closed in it or above it. Break even. Boom. Risk-free trade. You're fine. You know, you're no longer losing anything. It's a 100 win rate trade position there. So this is 100% my strategy. I just target liquidity. Let's do a little recap of what I just spoke about, because I know it can be a lot, and I am sorry if I'm doing this demonstrations, explanations wrong, too fast, not in depth enough, not enough visuals. This is my first time actually doing something like this, and I understand that that I might be doing it wrong for sure. So I do appreciate any feedback whatsoever. I'm 100% for sure. But first things first, sessions. Make sure well, I prefer New York. I always do New York. I don't do London. I don't do Asia. Why? Not enough volume in the market. I don't like that. It's very slow. And not only that, if you enter a position during one of those markets, for me at least, it's my sleep time. I am not trying to be in a position while I'm in bed. Not me. I've done it before. I hate it. I hate it. I do not like it. So no, I don't do that. For sure, New York market open. Always do that. Next things first, or next thing, liquidity sweep. Look for any resting liquidity on the upside or on the downside. Mark your liquidity points. So high, low, low, liquidity here, liquidity there. We also have liquidity here, 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 higher time frame. I would have marked that out before entering this, by the way. I would have marked this out, this out. Okay, so you guys get it. Marking out your liquidity. Make sure you have, okay, now you marked out your liquidity, market opens. Boom. Manipulation either to the upside or to the downside. Again, pretend this hasn't happened yet. We have manipulation to the upside. You would target one of these highs. You would target one of these highs if you had a manipulation to the upside. Those would have been one of your area of interest for a reversal. And then you would wait for your SMT, and then 50% manipulation to the downside respects 50%, either a fair value gap or just off the 50%. An internal SMT sweeps internal liquidity, and then you take that short. I would have taken that. Okay, so back to this one. We went down, right? Crazy manipulation down to the downside. We sweep Asia low, New York low. Boom. Sorry, I keep saying this wrong. We didn't sweep New York on NQ, but we did sweep it on ES. That is an SMT. That is, we have a 15-minute or a higher time frame SMT. Boom. First confirmation. Okay. You have manipulation. You have your SMT. Now you wait. I go to the 1 minute. I wait for a minute or a short upside candlestick, right? We get it. Boom, right there. You see it? Okay, good. This doesn't mean to enter yet. Not at all. Not at all. This does not mean to enter yet. Let me go over here. Okay. I wait. I mark out 50% of this up move, right? We're not respecting it yet. We came back down. Pretend none of this is here. So we came back down. Okay. Okay. We're still not respecting 50%. Boom. 1 minute SMT. 1 minute SMT. Even more confirmation. Even more confirmation. I am 100% sure we are going up. I would have entered this, but I missed my position. I'm going to be showing you guys the messages from my Discord that I did post to the group, and also showing you that I was targeting those highs. So boom, as we have the 50% here, we have a 1 minute SMT. Now you wait, you keep waiting. Boom, we keep respecting 50%, 50%, 50%. Okay, okay. I would have entered around here, for real. I would have put my my stop loss. Oh man. Okay, whatever. Let me just redo this. I would have put my stop loss not at the liquidity point, but below it. Not only that, we have a 15-minute time frame fair value gap. So, and then I would have targeted these highs up here. So, okay, we're in this now, right? You're in it. Let me go ahead and lock this. Okay, you're still in this. Okay, now you want to do a break even. Once you're in this, remember you want to minimize your losses as possible. So I like to go into the 2-minute time frame and then do some sort of fair value gap in it. We have these fair value gaps in here, 1, 2, 3. I like to target the very closest one. I like to close in it or above it. So you see, we go up, we tap into it, we don't close in it or above it. So I'm still down here as my stop loss. You're still in this, you're still in this. We come up, we tap into it, we respect it. We come down, we didn't get swept. Okay, we're still in this. And then, let's see. Oh, okay. So we are still in this. We come back up. Boom. We close above it. That's my break even. Right there. Break even. Okay. So now this is a risk-free trade. I would let this run. Okay. We tap into this other 2-minute fair value gap. We respect it. We come back down, come back down, we come back down. We're still in this. We're still going break even. I'm targeting this. You can choose. This is up to you. You can choose to take partials in the second one or let it run. So I personally would have let this, I would have taken some partials and then let it run to these highs. But yes, that simple as that. Okay, I think I try to simplify it as mostly that I could. I do apologize for maybe going too fast, maybe going too slow, maybe not going in depth enough, or whatever the case may be. This is my first time actually doing some demonstration like this, so I do apologize. I try to simplify it as mostly as possible for anyone who is trying to get into ICT style. Okay, this isn't for fully beginners that don't know what a candlestick is or what a higher high is, or that it's better to be on NQ and ES for correlating assets. Like, this is for people that kind of understand that, and you kind of just are looking for a strategy that might benefit you, might actually help you. If you guys do want more in depth for PD arrays, for the fair value gaps and those type of confluences, just let me know, and I will be making more in-depth videos so you guys can understand it, maybe simplify it. But this is my personal strategy that I do use to this day. And yeah, I hope this actually helped you guys. I'll be leaving a link down in the description so you guys can join the Discord. I'd love to meet some of you guys as well. Please check out the TikTok, which it's been catching some traction, but it's very difficult for me to balance everything out because I do work and I go to school as well. I'm only 19, boys, so don't think I'm a freaking millionaire yet. So, I do have these responsibilities that I have to do and take care of. So it is very difficult for me to balance, but I am going to make it work. I promise you, boys. And I've been in your position before. You might be in a worse position than I have been, or maybe you're in a better position where I have been. Whatever the case may be, We've all been there through the struggle, and it's the reason that we are here. We are trying to make it out our way or another. So it's okay. There's no judgment. I'd love to meet you guys. Please join the Discord. Yes, and any feedback, like I said, you guys want any videos for in-depth PD arrays, just let me know. I'd love any feedback, and I'd hope to see you guys in the next one. Make sure you guys like, subscribe, and leave a comment down below. Thank you, and God bless you.